So this is what I mean by a behavior I haven't seen in a while. So let's kind of walk back through today. Um, Let me turn some of this stuff off here so that we get a little better picture of what's in play here. We had non-farm payrolls, yeah, and that is like this range, that 30-second range. Here's the scene of the crime. Had the flush before the open, and they came back and tested the VWAP from that. So that's why I talk about you want to know the scene of the release, you want to know the 30-second range, and you want to know the anchored VWAP. That can really help you with bias as you progress through the session. And this is all a gap, so it's a gap. We're below prior day's range, so gap rules are in play. And not too shortly after the open, we closed the gap, extended IB high, and got back up here to build this node out around 840 on the composite. It was a spot that we'd done some business yesterday, and then doing that again today. What's unusual is to see this failure late in the day, and I think it came on the heels of some Fed comments. We have because of the influx of zero DTE options that has changed some of behaviors that you would see. For example, yesterday, we're barreling lower and accepting in this range, and then you see this ramp in the close. So that's a function of unwinding of hedges as you get to expiration, which is at the close. Today we get the opposite effect. Have some balance and then have this end of the day run, but the run is towards the end. And one of the things that I've had a lot of trouble on Fridays last number of weeks, because we'll be like on an extreme and then we get this like kick save at the end of the day, and that's just unusual historically for markets to rally significantly away from the extreme prices of a week on a Friday. Conventional wisdom would say, hey, nobody's taken the counter position, and really no one is taking a counter position. It's just a function now of that hedging unwind as you get into the expiration of those options and the close of those. I think it's at 4:15. But today, this, like, the fact that we went through that whole cycle with non-farm payrolls, kept testing that VWAP, and then late in the day sell off past that. Yeah, I think it sets the stage for the potential for a gap lower over the weekend, and to take it slower. A couple things around that also. So let's look at a daily on the Qs. We're still in this balancing range, but we're now at the 200-day moving average. And if we really want to make that, let's look at the triple Qs, the ETF. So we're above it on the triple Qs. IndieX is above it, right? So that's going to be the better analog. But as we're approaching March expiration, like we're getting to a period where we could see this thing really just kind of start to barrel off. So I would not be surprised to see us gap lower into next week. Now here's the caveat with that. Let's look at the SPX. So we are now inverted. So we do have curve inversion to watch for. So earlier this week, we got a little bit of a pinch in the curve, and then we got a kick save back in. And I was like, hey, if we break below this low, the stage is set for us to make a run down. So when you've got a curve inverted like this, any price lower is possible. Now, some people will go back and they'll go, well, hey, every time that this thing inverts, it quickly reverts. And that's true. It absolutely does. But let's make it do that. Let's make it do that on Monday or Tuesday. When we inverted at COVID, we were inverted for a month, right? So when we inverted last time for the tariff stuff, so the 31st, for a whole month, we were effectively inverted. So it's a spot where you can have some serious big drops by percent, when you're inverted. Like that was what let's see what that ES did on that. I think it was about a 10% move. Yeah, 16% move in that deal. So, we could easily, if we stay inverted, let's say for another month, and we say that this was the start, we could easily be in the camp of, 6K, something like that through the end of April. is possible. So curves inverted. Everybody is fearful. We're not in an expiration, like other than just a daily expiration. So the fact that we closed on the lows and closed inverted does suggest that, yeah, I would, I would expect that we will likely gap lower on the reopen on Sunday. And who knows what will happen with the stuff with Iran. I mean, again, geopolitical conflict. Typically, people look at that and say, "Oh, well, that should take markets lower." Uh, maybe if we were in the 90s when Exxon was a significant portion of the S&P 500 and energy companies were, but they're not. Um, so unless you're talking about something that changes the valuations of U.S. companies, like it's not really going to have a big play. Um, but non-farm payrolls showed, hey, we are having less jobs than we thought, and markets want lower rates. Uh, we had a Fed speaker out today who's kind of like, yeah, I don't know, like there was a change in the belief that we could see a rate cut, but I mean, so far, the Fed watch tool is looking at one rate cut this year, and we still, like, this quarter have a lot of corporate debt that needs to be refinanced. So if you want to go like full conspiratorial theory, you could say that Trump started the war to rattle everything to get interest rates lower. Yeah, put that in your pipe and smoke it. That's just being silly. But it is it's interesting. It's a different than what I've seen. So I'm interested to see where we go. We still have. Come on, stop. I think we have some untested overnight inventory down here somewhere. Maybe we've cleaned it all up. Yeah, back here. So, next target early next week would be, new weekly lows. We closed below last week's lows. And, then you'd be looking toward 181. We've got a naked weekly point of control at 955. Interesting. Interesting. We'll take it a day at a time, and we'll also, take it based on what playbook trade is there. I mean, this is all narrative, gang. This is not a trade. This is saying, this is the context upon which we look for a playbook trade. So let's imagine that, Monday we gap lower. Okay, so what playbook trade do I have to express that? I have an open gap go with. So that means that we've got a gap. We've got to hold the gap for the first hour, and then I can look to see some acceptance of the gap, and then I can take position. I'm not going to go sell this thing into a hole. So if we drop 500 points, we drop 500 points. I'm okay. It's the joy of missing out. This is all about stacking probabilities in our favor, and I'd rather be good than lucky, and the way to be good is just to look for playbook opportunities and express them that way. So, if you have feedback on that or further questions, I'd be happy to speak more to those. But I did find it interesting that, like, this is more of a behavior that I would have typically looked for on a Friday after non-farm payrolls if we were below the VWAP of that, and I just haven't seen it for a long time and had almost kind of given up on it. So it's kind of like, oh yeah, that's nice. It's good to see. All right, gang, peace.